Crude oil catching a bid today, despite new IEA warnings that demand still has a, quote, treacherous path ahead. Let's bring in Jim Urio of TJM Services, Bill Baruch of Blue Line Futures. Guys, good to see you. All right, fundamentally, Jim, you get the first crack at this. Where are we going?
Well, we talked about this on Friday because I wanted to see something to knock it out of the consolidation range was in. And fundamentally, we got some good numbers out of China in the form of retail sales and industrial production. We got some good numbers domestically out of the Empire manufacturing number today. We have the dollar, which looked like it was going to break out on the upside and seemed to give up the ghost on that over the last 2 days. But I think one thing that's not being talked about is a little important. I believe it was Morgan Stanley came out with a report yesterday that they expect the Fed's policies to cause inflation. Granted, they said not inflation until potentially 2024, but I think any mention of that I word's important. I think if it settles strong today above like 37.85, I think it's going up to 40.
Okay, Bill, technically speaking, what happens next?
Well, short term, we moved out of a wedge pattern, consolidated, broke out to the upside today, went back this early afternoon and retested that apex, and it's moving north again. I don't think you can chase this because there's a lot of resistance up there at $39. So, I'm looking a little more long term. I want to be patient. I'm even looking to using the December contract, wait for a little more of a washout, closer to $35, and build for the long term. That's how I'm looking there in the long term. Short term, you can't chase it up here against 39.
All right, good stuff. Guys, thank you. We'll talk to you both soon.